Gold dollar correlations are returning, and with them, susceptibility to downside volatility. As the banks start to recommend gold to Western investors, you've seen that here over the last weeks. They are using the coming Fed rate cuts as reason to buy or sell gold. That has reminded them, whether they like it or not, that has reminded their clients of correlations.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, I'm Vince Lanci, and today we're going to talk about is gold toppy and why it would be toppy, but more importantly, how correlations are back. You can see the markets right there. Let's run through them quickly while you're looking at the gold and silver markets. The dollar is up 49. 10-year yields are unchanged at 382. The S&P 500 is 56.22, down 3. The VIX 1581 up 40. Gold is 2,500, down 24 on the lows. Silver 29.35, down 62 cents. Copper down 8 cents at 418, 419. Gold silver is up a little bit as you'd expect. WTI is down 129 at 75.50. Natural gas is 194, down 2 cents. Bitcoin 59.90, 59. Call it 60,000. Up 600. Ethereum 25.27, up 68. No one really likes Ethereum right now. Platinum, palladium both down pretty much evenly. Palladium 950 and platinum 932. Any theory or any idea that I had about it being economically related, throw it out the window. This market is not, those two markets are not working that way. I'll figure it out later. Soy, corn, wheat, 997 down 11, 377 down 1, and wheat 533 bucking the trend, up almost 3. All right, you're looking at a split screen there. I am in the process of rehoning my technical skills. As much as I do not like technicians, as much as I think they're all frauds, not all of them. I must get good with my technical skills again, having abandoned it years ago. And in doing that, I've had to upgrade my system again. TradingView Pro, they have a lot of new tools, and I'm going to be using them. So the split screen is back. You guys will benefit from it. There are some technicians out there who I think know what they're talking about, and I'll be speaking with them so that I can train to attack the ones that are no good, and there are plenty of them out there. Anyway, let's get a little bit more serious. Dollar correlations are back. I had written this yesterday, and gold drops $24, and it's really quite disappointing. We'll get to that in a second. The front page, Zuckerberg admits Biden-Harris pressured Facebook to censor content. That's obviously not metals, but it is indirectly about metals. The silver dollar showcase, gold's 30th new all-time high close of the year. I sent that out last night, and there were many other stories. Stocks on the gold standard, Libyan oil supply disruption, stocks on the gold standard. Again, that's a different story. A little bit of social chaos. More debt is coming. And we did a little mini pod reaction to the Zuckerberg letter, and it was kind of troubling. And Citibank has some commentary on the Middle East risk growing. So we put out like 7 stories yesterday, and we intend to do that more frequently going forward without sending 7 emails to your inbox daily. So we're going to figure out a way to do that. All right. Dollar correlations. Gold dollar correlations are returning, and with them, susceptibility to downside volatility. As the banks start to recommend gold to Western investors, you've seen that here over the last weeks. They are using the coming Fed rate cuts as reason to buy or sell gold. That has reminded them, whether they like it or not, that has reminded their clients of correlations. We all know that the dollar and gold correlation is something that's been largely ignored for the last, over 2 years now, starting basically with the Ukraine-Russia war. But they're back. And they come back when you start looking at gold from a Western perspective. All right. If the West is looking at it, it follows from this that as Fed rate cut opinions rise and fall, So will gold and silver again, assuming Asia is doing nothing at the moment. Therefore, here's a knock-on effect. If stocks sell off because of earnings, I bring that up today because NVIDIA's earnings are out today. If stocks sell off because of earnings, you could see the dollar rise on the back of that. And you could see gold also take it on the chin as Westerners use these data points to get out of dollar-denominated assets. They will sell their gold once again to cover their margin calls in NVIDIA. But these are short-term behaviors now. These are not long-term structural problems anymore. So be aware of it. NVIDIA earnings are out today. If they're weak, stocks will broadly drop and gold will be taken with it. The question is, will the market remember it thinks the Fed is cutting in September or not? Meaning, if stocks rally, gold and silver will rally back with them. If stocks don't rally, then the market is telling you that it's fearful the Fed may not cut enough. It's going to be noise. Watch it though. We think dollar strength that causes gold weakness is not a reason going into BRICS and the US election to sell gold, but others will think that. So why say all this? Because the short-term Western mindset is getting triggered to sell if the dollar rallies and buy if the dollar drops. We know this is a sideshow, and you should as well. The real events for the rest of the year will unfold in the coming months. Try not to get caught up in it. Now, focusing on that short term for the technicians in the crowd, gold may be toppy. Technically speaking, the market may actually be short-term toppy as the longs get a little too crowded. Now, the market here has a comment out on this morning. They have about 7 or 8 charts to that effect. They're not telling you that gold is toppy. They're telling you watch it, it may be toppy. So here's a quote from that report. The breakout move higher refuses igniting properly. I think what they're saying is it hasn't ignited properly. It's been breaking out, but it's been fading. The longer-term trend is intact, but the fact gold isn't able to trade above the upper short-term trend is a sign of fading momentum. Let's see how this plays out, but gold bulls need the shiny metal to trade well above the upper trend line. Now, they're right. That's a daily. I'd like you to zoom out, not because we're rationalizing a bad position, but this line section here is this little section of Michael Oliver's chart. So this is Michael Oliver's chart, but this is a kind of recreation of it. The monthly chart, the monthly channel, we're above that. It looks really good. But on the daily chart, if you look at this area here, you'll see there's like 4 or 5 wicks, touching the area before we get above it. But if you use those wicks as a line, you end up getting something that looks like this. Okay, so you could argue, as the market here is, if we don't get above that, you could start to see other indicators roll over and the market will take it on the chin, especially if the dollar is stronger. If gold breaks above this line, you could see this short-term reignition happen that we're looking for, which would be bolstered by the fundamental or longer-term chart that Michael shows us. All right. Next quote by them is actually them taking a bullish statement and flipping it on its head, but that's how you look at things if you're truly a risk manager. Last week, Bank of America wrote gold is now the second largest reserve asset and has one of the lowest correlations to stocks across asset classes. We showed that in our HeartNet breakdown. You can look at the same data and say, you know what? Too much money is in gold. It's a crowded trade. Be careful, right? If you're a contrarian, you're looking at this saying, well, how long can this go on? There really should not be a lot of FOMO in an asset like gold unless the end of the world is coming. Now, okay, maybe the end of the world is coming, but I don't see oil breaking $150 yet. Okay, so the case can be made that the market is toppy. If you want to get an idea of that, look at this, what happened to gold after that. Look at this, what happened to gold after that. So you could arguably say that crowding brings selling, crowding brings selling, crowding brings selling. So you could arguably say that crowding may bring selling. All right, but that's Western selling, not Eastern selling. Okay, we have more, where is that? Pardon me. I am just really bad with this today. All right. We have some more analysis on that at the bottom. Here's the data today. The data today is the Fed President Raphael Bostic. Ignore him. He's just blabbering whatever needs to be said to appease the markets and probably to talk them down if there's he just wants you to look at them. The most important thing today is Nvidia. Nvidia earnings come out. If they come out extremely strong, stocks will go up, silver will go up, gold will go up because the market will say, well, the Fed's still going to tighten, ease, but we don't care about that right now. If Nvidia's earnings are weak, everything will drop. And then the question is, will the markets say, oh, the Fed might cut 50 basis points now? I don't know. I don't pretend to know, but I will say that gold will be unfairly dragged around by Nvidia today. You decide if you want to buy the dip or if you want to sell the dip or if you want to buy the rally or sell the rally. But just know that if you're looking at the prize, and that is how the market treats the election, how the market treats the BRICS, and how the market treats all the fact that everyone wants the gold now, right? Then these little wiggles and waggles don't matter. So that's it. I'm Vince. Let's take a quick look back at the markets. We'll go with the hourly. Right? Looking ugly right now. I'll go back to my main screen here. Ooh. That yellow line, that's Michael's monthly line. Okay. Reminder, yesterday was the 30th. I'm not sure. Peter Spina made a comment on it. The 30th, I counted 30. He counted 31. New daily all-time highs for the year. It's fascinating, it's excellent. So maybe pullback is in order. Vince, have a great day.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week. And if you've been looking for a pullback in the rally to purchase gold and silver, this week's deals include 1-ounce silver Philharmonics from the Austrian Mint in Austria, go figure. Fortunately, these beautiful coins are only $3.10 over spot. Well, we still do have silver under the $30 level, which it obviously eclipsed earlier this year. And on the gold side, this week's special is 1-ounce gold Contrarians for only $60 over spot. And again, you can place an order by calling 833-326-4653 or emailing us at arcadia@milesfranklin.com. Happy to answer any questions you have and get you set up with whatever you need. So call us at 833-326-4653. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.